let's get a sense of how you're reading this recovery, because just over 3-4 weeks ago, I think there was more pessimism than the optimism that I think we're seeing now.
I think investors generally are driven by fear or greed in the markets. You probably find that when the market's going down, everybody's looking to get out, you know. But in our view, we believe that we should be buying value. You know, the downward trends always create an opportunity for us to buy, you know, and I guess that's what our investors pay us for anyway. You know, so where you have banks that are trading at probably half times book values, trading at single-digit earnings values, so maybe 8 times earnings, 9 times earnings, that provides significant opportunities for us to get into the market. So that's what we would do.
Right, and I mean, you're just speaking of value now, and obviously one topical issue recently is the rescued banks. They are leading this market higher. I think on average they're probably up about 20%, particularly the likes of Bank PHP, Oceanic Bank, Intercontinental. You know, there's a sense that, you know, there's a lot more interest. Is there value in those banks? Has anything changed significantly in your view?
In our view, there are different types of investors in the market. You know, you've got value investors, you've got people who are speculators, you've got your traders or proprietary traders who are also in the market, and then you've got the retail segment as well. In my opinion, the people who are buying these rescued banks probably are more speculative. For value, there is so much uncertainty still at the moment, even though we've seen the court judgment regarding the former Oceanic Bank MD, you know, and that's good news somewhat. You know, as a value investor, I would like to see more clarity and be able to adjudge the value myself before I start going into these opportunities. But right now, I would still stay out.
Now, I know you are focused on fixed income investing. So just take a look at the yield curve right now. We've seen a bit of a correction in the bond market.
Yes.
And 20 yields are much closer to inflation now.
Yes.
And that wasn't the case 2-3 months ago. Where will you be investing along the curve now? Where will be your focus?
We still see some inefficiencies in the yield curve, though yields have generally gone up. So in the 3-year spot, you would find out that yields have gone up about 400 to 500 basis points. In the 20-year, you probably find out that yields have gone up around 300 basis points. In the 5-year as well, yields have gone up somewhere in the region of 500 basis points as well. However, in the 7-year and the 10-year bond, we haven't really seen that much of a correction. So you've seen probably 150, 200 basis points move in those points. What we believe is that because the underrun securities are 3, 5, and 20-year, right? Obviously, we are being repriced at the auction. However, because the 7-year and the 10-year are not trading and inflows are not going into those particular points on the curve, then you don't see significant shifts in those particular points in the yield curve.
I know, obviously now, we've seen in the bond market that there's more focus on the inflation rate, and recently that came down to 13.6%. Yeah. What are your general expectations for inflation?
I think going towards the end of the year, we should see significant inflationary pressures. We may see inflation at probably around 14%. And that's just driven by seasonal factors, really. At this time of the year, maybe things are a little bit quieter. I don't think it's because of the MPC's move last month, you know, because you would expect that any move the MPC takes will probably take another 6 months for it to really manifest on the economy. You know, I think that yields also should correct and adjust. So at the next auction, which is tomorrow, I would like to think that the 5-year will probably, sorry, the 7-year, which has been reopened, will probably close around 10.5.
And then what about the economy? Obviously, that's something you want to keep your eyes on.
Sure.
If you're investing in bonds. And are you cautiously optimistic with all the talk of reform from the government, or is it still really fingers crossed for you?
Regarding reforms, I would like to think that I'd like to be optimistic. You know, Nigeria is such a huge country, and we're beginning to, and we have a lot of foreign participation as well. I would like to think that the government of the day would like to, bring some of these reforms to bear, more particularly the CBN. We can actually see some of the things that they're doing, and we believe with time, the country will be the better for it.